Hi everybody, welcome to Investing Club. In this video, I'm going to show you 3 stocks that are paying high dividend yields but are unlikely to cut their dividends. I consider these 3 stocks to have a safe dividend because of the strong earnings and free cash flow they're bringing in. And so if I was to invest in any stock for the dividend, it would likely be one of these 3 stocks. Now, before I get to the stocks, be sure to hit the thumbs up button to like this video. It really helps out my channel. All right, and now let's get to the 3 stocks. So I am not someone who usually invests in a stock just for the dividend. I'm not a dividend investor per se. But if you are someone who invests in stocks mainly for the dividends, these are 3 stocks that I would likely take a closer look at. And this is not financial advice, and I am not a financial advisor. And we are in unprecedented times right now. So even though I wouldn't expect these companies to cut their dividends, anything can happen in the coming months. And so it is possible to see these companies cut their dividends, even though I wouldn't expect it. Okay, and now let's get to the first stock. The first stock is Unum Group, ticker UNM, and they are a life insurance company. And currently they are paying a 7.5% dividend. And I consider this dividend safe because they have a payout ratio of only 23%. So they're only paying out around 1/4 of their earnings as the dividend. And in addition, the price to free cash flow on this stock is under a 3. So this company is being valued very cheaply right now, as are most insurance companies. Now, if you want to learn how I analyze dividend stocks to assess the safety of their dividend, check out the video where I show you. I'll put a link up to it right now. So based on the strength of this company, I do consider their dividend to be safe. We can take a look at fast graphs, and on this website, the orange line represents the earnings. So this company has a very strong record of earnings growth, strong record of dividend growth as well. The dividend is represented by the white line on this graph. The dividend has been constantly being raised for at least 10 years, maybe more. I don't see that changing anytime soon. In addition, we can take a look at their free cash flow because that's what I really like to see cover the dividend. And as we can see, the cash flow is consistent and has been increasing over the past few years. So this gives me a lot of confidence that this dividend won't be cut. Again, there's no guarantees, but just based on the amount of free cash flow they're bringing in, it would really be a surprise to me if they cut this dividend. Okay, so the second company of this video is Alliance Bernstein Holdings, ticker AB, and this company is in asset management. And this company is currently paying an 11.23% dividend. Their payout ratio is on the high side, it's 96%, but there's a few reasons I think this dividend won't be cut. Now we're on fast graphs, and the first thing to note is the earnings are expected to increase. So right now, a lot of companies are expecting earnings to be cut greatly for the rest of this year, but this company is actually expecting an increase in earnings, which will definitely help their dividend. And their payout ratio is around 95%, which is not great, but we can take a look at their free cash flow numbers. And what we can see is very consistently, the amount of the dividend has been equal to the amount of the company's free cash flow. And so this is a company that consistently pays out almost all of its free cash flow in the form of a dividend. And so if assuming this company still produces free cash flow this year, which I expect they will, it's very likely that they will continue paying the dividend. And taking a look at some of the news about this company, their assets under management rose in April based on more investors giving the company money to invest on their behalf. So this company looks to be in a strong position, and I think their dividend will be safe. And the last stock I'm covering in this video is Navios Maritime Acquisition, ticker NNA. And this company is involved in oil tankers. And I've covered this stock in a previous video where I go over oil tanker stocks. I'll put a card up to it right now. And a lot of people are interested in oil tanker stocks right now, and for good reason. The price of oil is so low, everyone wants to be storing oil, and these companies are definitely benefiting from that. Now, this company currently pays a monster dividend. It's almost 25%. And they've actually been paying this dividend for the last few years. If they've been paying it for the last few years, this year earnings are expected to jump by a high amount. It makes sense that this company would still be focused on paying the dividend if they are interested in delivering value to their shareholders. Now, in my video where I talked about oil tanker stocks, I said if I was to invest in any oil tanker stock, it would probably be this one just because of the dividend and the upside potential I see with this stock. The main risk with this company is they have a large amount of debt coming due in 2021. So the success of this company largely depends on their ability to roll over or restructure that debt. But assuming they can get that done, I could see that this dividend will continue being paid and that we could also see some capital appreciation with the stock. Again, this is a company I wouldn't hold for the long term. I think the oil tanker industry is generally a pretty lousy industry. But if I was to buy the stock, it would likely be for a year or two so I could collect that dividend and possibly see some capital appreciation. This is an oil tanker, and like all oil tanker stocks, they are speculation because no one knows how long the price of oil will stay down this low, and we have already seen oil rebound nicely off the lows it had last month. So for that reason, this is probably the company I'm least confident about, at least in the long term. In the short term, for the rest of this year, yeah, I see this dividend being paid out just because of the amount of earnings this company will be bringing in. But over the next few years, as their earnings likely start to fall, it's unclear what this company will do in regards to their large dividend. So these are the 3 stocks in this video. If you enjoyed the video, be sure to leave a like, subscribe to the channel where I post videos like this multiple times a week, and I will see you on the next video.